Hey guys, good morning. May 13th, 2021. It's about 6:45 a.m. And if you're looking to trade the markets today and over the next few days, there's a few things that are probably on your mind. Number one is how low will Bitcoin drop? Number two, how low will the market drop? And is it actually the time to buy the dip? Now, what should really be on your mind is exactly what type of trades you should be taking today. What are the ticker names? What are your exits? What are your entries? It's not enough time for me to cover that in this video. That's why we have a membership program where you can sign up at 13marketmoves.com. Now, in this video, however, I will give you some clues. I will give you some really useful guidelines, and we're going to do that by looking at the history of the charts. Now, clearly, if you are paying attention to the headlines, damn it, just a few days ago, he was willing to take Dogecoin for the shit, and now he won't even take Bitcoin for it. Okay, how low can Bitcoin drop? Now, understand this, that we've been talking about Bitcoin crash now for about a month, and it crashed or corrected multiple times, including all of these stops that we've pointed out over the course of the last 45 days. So basically, all of these were shorting opportunities in Bitcoin. We specifically pointed out at this level. So the fact that it's finally breaking down just coincides with the headlines. However, all of these preceding sell-offs on stronger volume, people getting out, the behavior of people getting out was there. And it's likely to continue. The volume should be much stronger on this chart. If you review this chart, in a few days, you're going to see some new red bars right here, but they could actually be much higher in volume than these ones right here. So things are still highly bearish for Bitcoin. The chart has been deteriorating at rapid speeds. We've pointed out the divergence between the RSI and the price action. It's been there. We've pointed out this head and shoulder pattern developing. The head and shoulder pattern right here. Inevitably, we're heading lower. The question is how much lower. We're going to take a look at some historic charts to help you understand how bad can this move in Bitcoin can actually get. By arriving at the concrete answer to that, you will be able to potentially double, triple, quadruple your overall Bitcoin holdings. You can easily short this and accumulate a lot more Bitcoin at a lower level, opposed to the general concept of HODL. That does not get you nowhere close to the kind of results you can use by understanding 13 market moves and timing these big moves to your advantage. The second answer we're going to give you in this video is how low S&P 500 is going to drop. So if you watched the prior video, we've pointed out some levels, and so in this video I'm just going to be a little bit more precise. And before we glance at some of the historic charts, I want to take a look at one other chart, because this is where lies one of the key answers to how low can the market go and how low can Bitcoin go. And we're going to take a look at the chart of VIX. So most of the people, what they're going to tell you right now is the fact that this is the top in VIX. And based off what we study here in our curriculum of 13 market moves, we're telling you that there is a much greater move in the VIX. And by determining how far can the VIX actually escalate from this level, not without any pullbacks. Okay, remember, pullbacks on the VIX, you want to be buying the dips when VIX pullbacks, because ultimately the move is going to be higher. And we're going to take a look at a particular time frame in history that's going to help us understand how far can VIX goes given current market conditions. So to us, this chart is bullish, where most of the people would say, hey, every time VIX pops, it drops, it pops, it drops. Now, clearly, in certain instances, a lot of them are at February time intervals. As you can see, not only does VIX pop, but it manages to pull back and pop again. And so that's when the bottom actually takes place. A lot of times, as you can see right here in this instance, it pops, and it's going to pop one more time. It pops, and in this case, it doesn't quite recapture the high, but nonetheless, it stays at this higher level for a little bit of time. So the chart that's going to give us some clues of where these levels are is going to be the chart dating to February 2018. And the reason for using this time interval in history is because it's exactly the time where the market had experienced some turbulence due to the fears of inflation. So normally we want to identify a historic time frame, and since this one is the closest time frame in history where the market has been reacting, overreacting, or had a meaningful type of reaction with a similar catalyst, which would be the fear of inflation. We're actually going to capture the month of 2017, the last month. Let's go with 11. Let's go with November, so you can see actually what Bitcoin was doing at the same time as well. We're going to glance at that. And so let's utilize this time frame and see. All right, so what you will notice on this chart, yeah, this is on the daily time frame. Okay, so if we date to February, there's been a major move in the market lower due to the fears of rising interest rates. Now, at the time, the rates in January, February of 2018, they were actually substantially higher than now. But it's not about where the rates are, but where they are going. So from that perspective, people were fearful that the rates could go to 3%, potentially. I mean, there were crazy stuff. People were saying, oh my God, what if they go to 4%? So clearly at the time, the fears, they were not justified, let's say. However, what is meaningful about this aspect is this move in VIX from 8.9, which was a historic low, to a level of 50 plus, came in within just a matter of 10 days. And notice when it hit the level of where we are right now, about 27, it didn't necessarily slow down. So we had similar catalyst, and VIX went fivefold. Now, I will say this about this particular time frame in the market history is this sort of movement, okay, in the VIX was due to the fact that a lot of market participants did not see this huge potential for rates to move higher. So they were caught off guard. Now, in this particular instance, we've been expecting inflation for a year. And so this doesn't have such a surprise momentum as it did back then in February of 2018. Basically, we shouldn't expect VIX to go to as high of a level as it did back then in February because the surprise element is simply lacking. However, VIX does have some more room to run from a level of 27. We believe it can easily hit these levels right here of about 40, which would coincide at that point with multiple top formations. So we got about extra 13 points roughly in the VIX, and that, let's see where could that put us overall in the market. Number one, let's analyze what the market did within the same time frame on SPX. So you saw this huge move in the VIX. Let's see how badly did that actually damage the market back in February of 2018. So SPX, as you can see, it went from here to here, which was about a 300-point move. Considering the drop roughly, guys, I'm using rough numbers here, from 2,900 to 2,600. That's about roughly a 300-point drop, which would represent about 10% move lower from this high point right here. Now, if we examine the situation right here, clearly a year ago when the markets were falling off due to COVID, by the way, if you're new to the channel, we have accurately predicted this drop a month before it actually happened. Now, understanding this drop situation is VIX went to a high of 85, 88, but the market literally fell out more than 50%. So some of these reactions, they're not necessarily proportionate. In other words, the rise in the VIX is not going to produce the same type of percentage decrease in the market. So considering a number of, here we're at 10%, here we're at 50%, okay? If we were to just average this out, and knowing that the VIX has a high probability of going to 40, we can use an easy number of 15 to 20% right here. Now, if we're to use the same numbers right here from 2018, we're guaranteed a drop to a level of 3,810 bucks, which is consistent with the rough draft I gave you in the prior video. So basically, VIX, basically S&P 500 can easily drop to a level of right here, 3,800, which would be very consistent with this strong support level on this chart. Now, how low can Bitcoin go? Let's cover that real quick. As you can see, in December of 2017, Bitcoin sets a high right at 20K. By the way, this was one of the first videos we have posted on this channel, predicting that within 12 months from that point, Bitcoin was going to trade down to 3,000. And that's exactly what happened. After that, we told you to buy Bitcoin. Now this time, over the course of the last 30, 45 days, we've been telling you to short Bitcoin just like we did back here, so you can profit and make money, so you would be able to buy more Bitcoin after all said and done. Now, this is a very different top formation. This was a loss of momentum right here. This is a head and shoulder formation, and we can easily see this going not just to the level of 38,000, which would be the first target, but we can actually see easily the market dropping all the way, Bitcoin dropping all the way to a level of 25K, which would be right here, guys. Okay, so as you can see, this number right here from 20K, we went down to 7K rather quickly. But if we measure the same time frame drop in the market, when the market lost the 300 points, okay, Bitcoin was already down to about 13K, and so it moved down to about 6-7K right here, represented on this dip. Of course, it bounced, drop, bounce, drop, bounce, drop, consistent with the pattern that we described in the last video of helping you guys understand and visualize what it actually means to short the bounces. So we're in that same time frame on Bitcoin again, where it makes sense to do what? To short the bounce. See the bounce right here, then it drops. Short the bounces, guys, and it's just a highly repetitive pattern. It allows you to go back in multiple times and make a lot of money here on shorting Bitcoin. So, but make sure that you're not buying the dip. Make sure that you're not shorting the dip. Make sure you focus on shorting the bounces, guys. This is the name of the game right now, short the bounce. Now, as you can see, this drop right here, you may be thinking how you coming up with a potential to 38K or 25K drop in Bitcoin. You just look at the historic drops in Bitcoin, okay, and you apply the same percentages to here, okay. It's reasonable to expect that 25K level would be on the aggressive side. Level of 38K would be more on just a light sell-off type situation. So, but nonetheless, Bitcoin trades this morning. Let's see exactly where it's at now. It is at 48,945, so 49K. So we can easily have another $11,000 worth of room. And as you can see, based off what history tells us, we don't necessarily have to wait a long time for that to happen. As a matter of fact, if we look at this data right here, it could happen over the next 10 to 14 days. Bitcoin can drop down to 38K. Now, it could also have a chance to drop all the way down to 25,000. So now we've got some pretty concrete answers of what key levels we're watching, and some of the clues as far as the market concerned, besides watching the level on the VIX. Let me show you another thing that I would look out for. We have been able to successfully use the Amazon indicator, and there's no such thing really as an Amazon indicator, but we've been able to utilize some technical levels in Amazon to predict when is it actually time to buy the dip in many other stocks. So looking at this chart right here, guys, your level to potentially consider buying the dip would be a level on Amazon of about $2,880, $2,890. We're still at $3,151. Amazon's got another $260 to drop to this level around here. Now, once it is at this level, it is likely to coincide with a level on VIX of about 39, 40, 42. So remember, our overall target on VIX is right around 40, give or take a few points. And so this time frame on this point of support on Amazon of 28.80, 28.90 could coincide with the VIX hitting that target. Once you see that, it is probably reasonable to expect that you will get some meaningful kind of bounce. Okay, not necessarily a sustainable bounce, but that would be the level to keep an eye at if you are a bull and if you're trying to put on some call positions. Now, in the meantime, nothing has changed in the market. You want to stay consistent with shorting the bounces. And if you wanted to know some of the key stocks that we're trading today with utilizing weekly options, guys, please make sure you click the link below this video or go to 13marketmoves.com. Hopefully some of this historic data is able to help you visualize the markets a little bit better going into the next few days. And if you need further explanations on some of these factors that I've shown you here, if you have further questions, feel free to schedule a 20-minute coaching call with a senior trader here at 13 Market Moves. I wish everyone happy trading in the next few days. Let's roll. I'll catch you on the next trade soon. And hey guys, don't forget to short the bounce. As you can see, the market is bouncing strongly pre-market this morning. It's bouncing. So what do you do in the overall context of when we're in a severe downtrend? You use these opportunities when something bounces to your advantage. That's when you buy puts on the bounce, not when stuff collapses. You want to wait for the bounce to enter your positions on the put side. So Bitcoin is bouncing too, guys. Remember, don't be fooled by this green action. You want to use it to your advantage to short the bounce. Let's roll.